Welcome to the second video on mutual funds. Let's discuss some key features of mutual funds. Investors in mutual funds buy shares from the mutual funds and sell redeemed their shares to the mutual funds themselves. Okay, the second feature is the shares can be bought through a broker, and this could be a registered broker. Obviously, the third feature is mutual funds are acquired by law to price their shares each business day. Okay, and they typically do so after the major US exchanges close. This is in the context of US market. The fourth feature is that this price that is the per share value of the mutual funds assets minus its liabilities is called NAV, or net assets value. So it is clear that every mutual fund needs to price the value of its shares each day at the book value, at the net assets value of the mutual fund. Okay. The next point in this regard is mutual funds must sell and redeem their shares at the net asset value that is calculated after the investor places a purchase or redemption order. It is also a simple point. Why the mutual funds are required to calculate their net present value each day? Because they need to sell and redeem their shares at this value. And the sixth and last point of this video. Now, what this means, this means that when an investor places a purchase order for mutual funds shares during the day, the investor would not know what the chase price is until the chase price is what the purchase price is until the uh, next NAV, net asset value, is calculated. So these are the 6 key features relating to mutual funds for this video. In the next video, I will discuss some major types of mutual funds.